where you've gotten into a position, it went completely against you. You might have gotten into the opposite side of that position, then it went completely against you too, and then it continued in the direction you were right about, but it never gave you that retest or that re-entry. And you were left sitting there going, crap, I should have just done this now that I see it. But you've never been able to actually do it. Maybe you've caught that one move, and at that point I say that's even worse for you, because you now believe that there's potential there's a potential in, trading like this for a living. And if you've seen any of my other videos, I don't want anyone to start leaving in the comments, the idea that, oh, you can be successful trading. There's been people successful trading support resistance and all this other stuff. And if you go and look at my other videos, you can be successful. But I ultimately explained that it's only because they've created an algorithmic way of trading out of it, which you can do significantly easier by just throwing a few indicators on a chart and starting to trade off of those. Not RSI, not MACD, none of those, okay? So I think this brings the video to a pretty good end, right? Generally, what I need you all to think about and to start looking at in the markets, especially if you're a retail trader, is how you're getting faked out and why price is moving to areas of liquidity, aka where the most orders lie, and why they're moving there, right? I've said it to everyone, I'm going to say it again. If you spot it and think it's the easiest thing ever and everyone's looking at it and it's a beautiful support line and you've seen it happen multiple times and there's support resistance that you're just guaranteed on, and you know that everybody sees it, why would price move from that area if there's another interest in the market that has a lot more money than you that wants to make money, right? So next time you start seeing something get broken or you see that false breakout, consider the idea of liquidity if you haven't yet, or if you're a beginner or you don't believe it, me or whatever. Even try a replay tool and just go through price and start watching what happens, right? We can jump on any currency, and I've done this with my clients. I've asked them for a currency, I ask them to stop at a certain place, I start replaying, and we start talking about what's happening to price. And by the end of it, the clients are able to discern what's happening in a market, where the market's most likely going to go, and where orders lie, right? Like very quickly even, this trend line right here, right? You start seeing this trend line form when? Not here. You don't see the trend line form really here. You're still looking at this trend line here, right? And then all of a sudden you start seeing this trend line form. So you're anticipating what? A retouch and then a sell. Okay, well that retouch kind of breaks it. So where's your new trend line? Is it this area right here? Right, so this trend line becomes this right here. So this is actually a full-on break and a retest of it that then doesn't get respected, but then is respected, right? And you could have been looking at this as, oh, I should have just entered on the full-on retest of it. When in reality, this could have been your trend line. And you might have seen this instead and started selling here and been very happy with this movement before we ultimately did what? Catapulted to the high side. Why did we catapult? Well, because we created enough what? Liquidity above this area, above this area, above this area, this area, this area, this area, this area, this area, and then at the same time on lower time frames, or even on this one, tons in this area, in this area, in this area, in this area. So at this point, there were most likely more people selling, or the masses were most likely selling than buying at these points. So by the time we got to an area where the composite man or smart money wanted to get involved, everyone had already formed the opinion that we're going to go lower, right? And like I said a second ago, if it looks good, it usually isn't, right? Unless you've attuned your brain to start seeing areas of real inefficiency, right? So when I look at a market like this, I see this huge imbalance here, right? That needs to be filled in the future. That's been filled about 50%. That's why we moved from here, engineering more liquidity below all these lows here, grabbing equal lows, coming up to fill in some inefficiency here, coming lower, have a white coffee and accumulation here before we take off rather heavily. Why do we stop here? Because we hit this order block. We hit the order block to mitigate the positions that we used to buy here to take out people that were selling here on a shorter time frame, to come lower to create what? An area of consolidation. On a lower time frame, again, remember, this looks like a much bigger area. We come down, taking out all those people, making what happen? People wanting to sell and people that wanted to sell here, and taking out people's stop losses that were buying here. After we do that, what's our point? Well, we've gotten rid of all our positions that were sells here, and we've taken all the people's positions here. So now all we have open is buys from back here, buys from down here, from here, here, and now from here. So what are we most likely going to do? We're going to take off, right? But what we're also going to keep in mind is once people have started to see that there's a trend line forming here, right? What have we created again? Liquidity below here, and below here. So what's most likely going to happen? Well, there you have it. We're going to come down to grab all that liquidity, and once we've grabbed all of it, we could either come and fill this order block, or we'll take off, engineering what? More liquidity in the form of, as you can now start seeing, this trend line, which got respected for half a second before it got broken, retested. So you might have been stopped out here, retested again and broken on a lower time frame, and then came down lower. Coming where? To this mitigation area, right? And again, this repeats over and over and over again. We create areas in the market that look pleasing to those that have not educated themselves or have not done enough research and testing in the market, so we can take them out. But we also continue to create areas that look so beautiful and presentable that gurus and YouTubers can go and use those areas to ultimately become profitable and teach you how to trade that way, so that more banks and more smart money can continue to take out your orders. Okay, so this video has gone way over, and I hope this was very helpful for those that stayed throughout the whole thing. I'm sure your perspective, at least I hope, was changed. If it was even just the tiniest bit, please leave a comment or a like. If you hated it, please tell me why. I'd love to know. But generally, this is the idea of liquidity, and this is why price moves into certain areas. Okay? So, thank you for watching, and stay posted for the next video where we're going to get into the idea of Wyckoff with liquidity and future videos where we're going to get into inefficiency, because that's what's going to... Those concepts are the ones that ultimately frame huge and amazing setups for us. Okay? Thanks for watching, guys. This is MattFX. Stay posted for the next episode.